Hi. Hi there, I'm Pete Andresen. I'm with Andresen Associates Incorporated. We are fee-only money managers, and we push the fees down, which is unusual. And we tend to be very cautious when the markets are overvalued. And I'm making this little video because today is the 34th anniversary of why we do all of that. And the thing that kind of changed my life was the stock market crash of October 19th, 1987. I had left the Marine Corps. I was in the Marine Corps Reserve. I worked starting in 1985 in E.F. Hutton, and I was a stockbroker. Went through the training, went through all the training. I had a master's degree in international development, specializing in international finance. Passed the Series 7, all that stuff. Got to E.F. Hutton at Carmel. Wonderful, priceless manager. Beautiful. I'll never forget those 2 years. And they give me a phone book and say, here's the phone book. You call, start calling. Well, that's, I didn't get a master's degree in finance to call people. But frankly, what the commission then was 2%, just the commission. And they were making big money. I wasn't, because I wasn't good at calling. I was good at portfolio construction. I was good at seeing what was coming. And the stock market had been going up pretty much without a problem since about 1982, if I remember. It'd been a good run. And we got some storm clouds going. The interest, well, we got a little spurt of inflation. Does that sound familiar? And we got a rising interest rate that started to pound bonds. I mean, it really started to pound on bonds. And it wasn't a very bad rise, but like then I recall seeing negative 7% on the treasuries, things like that. So I said to the guy sitting next to me, what do we do? I mean, and the guy said, the young man who went on to become very successful, looked at me and said, you sell them the investments with the biggest load, and that can be 5 or 7% load paid to the stockbroker, and you hold their hands when it crashes. So I quit. I went out and started my own business on October 1st, 1987. And I domiciled under Christopher Wheel. I had my own ADV, but I didn't know enough about how to run a business. Heck, I'm still learning. So I went on October 1st, 1987. And those of you who were clients then will remember that we were very conservative because I was very concerned. All the statistics said the market was overvalued. And I had taken some crap, to be honest, because I'd been that way for a couple of years. Well, we had a couple of stumbles. And that morning I came to the office, and I was already, like now, I got up early back then, and I got up and looked at the CNN, which was new stuff back then, just like MTV. I used to watch that too. And Hong Kong was down 50% in one day. So I knew that something was breaking hard. Got to the office, we turned on what was called the Quotron, and we turned on the TV. And over this loudspeaker connecting to the floor of the New York Stock Exchange, it start, 6:30, you could hear screaming. You could hear shouting and screaming and chaos and a roar, a horrible roar. And the market fell 23% in one day. 23%. That's 1 out of every $5 gone in a day. And other, Hong Kong was down 53%. It swept all around the world. Everything was down. Everything was down. And that was partially due to program trading. That was partially due to portfolio insurance that was computerized. So it automatically, I mean, and remember, computers were they're pretty primitive. So when things would drop, they just sell stuff. So this was the first time that computerized trading actually played a role in it. Now, I don't think you could do that because of trading stops and cool down periods and restrictions on how far the markets can fall that are in place because of what happened on October 19th, 1987. So what happened next? What happened next was I bought lots. Right when everybody was selling, I bought, for me and for my clients, we bought lots. The market has, how do you say, exponentially increased to the point it's not just double, triple, quintuple. It's just blown the doors off since then. So our buying was a good thing, but that set the stage for me because I learned that markets can be irrational, that when the market is giving you warnings, you should listen. That has panned out. It panned out great in 2000, big time. It panned out in 2008. I'm not sure how it's going to pan out now going forward in this age of stimulus, though. If the Fed keeps involving itself, maybe those days of being able to see a clear light of an oncoming train, maybe that time has passed. But anyway, I just wanted to share this anniversary. I don't have any alcohol, I'm here at work, but let's raise a glass tonight to the great stock market crash of October 19th, 1987. Thanks. Here's hoping for some rain.